ICICI Bank then reported strong turnaround on the asset quality front in the second quarter. The private lender has also reported net NPAs at 3.65% versus the earlier 4.19% just in the previous quarter. So again, a marked improvement coming in there as well. Meanwhile, the NII, that shot up about 12%. Here's what the management had to say on the future outlook.
Our gross non-performing assets were 544.89 billion rupees as of September 30, 2018. The provision coverage ratio, excluding technical prudential write-offs, increased by 480 basis points sequentially to 58.9% as of September 30, 2018. In the quarter, concerns emerged around a group engaged in infrastructure financing and EPC businesses. Our exposure to this group is primarily to an EPC company within the group and is primarily non-fund in nature, comprising guarantees. The internal rating of this company was downgraded to BB and below during Q2 2019, and the same is included in our corporate and SME BB and below portfolio at September 30, 2018. The loans to NBFCs and HFCs were about 5.4% of our outstanding loans at September 30, 2018. Our lending has been focused on entities that are well rated, have long vintage, and are in the public sector or owned by banks and well-established corporate groups. We continue to do business with them subject to appropriate risk assessment and pricing.
Sandeep, Bakhshi highlighting the analyst conference call for the first time in his tenure this quarter. Let's take it across to Ashutosh Mishra as well to try and analyze ICICI Bank's performance. Ashutosh, hi, morning. How have you read into ICICI Bank's performance? Impressive as it may be, do you think the stock already was factoring in this kind of a recovery?
Good morning. So the stock was definitely factoring some of these positive which were expected to come in this quarter, but on many counts they have surprised us, especially on the improvement in the PCR on a sequential basis. So now they are reaching to the PCR where if you look at what is happening in the NCLT, almost it's clearly showing that the incremental pressure on the PNL because of the asset quality issues will be behind them in probably the next 6 months or so. And this, along with returning on the growth path, is quite positive for the banks. And management issue is also behind us. So there are many positive triggers which have come in the last 1.5 months. So that is really will help the bank to outperform in the current market scenario.
Ashutosh, now ICICI Bank has been a ranked outperformer. In this market fall where everything is fallen in the financial space, insurance or NBFCs or other banks, ICICI Bank has managed to hold out. So rather than looking at an immediate upside, even if ICICI Bank stays where it is, post these numbers, do you think one should take heart from that and one should view that as outperformance rather than looking at absolute appreciation in the stock?
Definitely you are right on that point, because when so much of negative news was flowing on many other counters or even for the sector, ICICI Bank was receiving many positive incremental news in the last 1.5 months, and that has really helped our stock to outperform within the whole sector. Over and above what this results and the future guidance clearly indicates, probably this outperformance may continue for them in the coming period too.
Leave it at that. Thanks so much for highlighting what your opinion on ICICI Bank's performance has been.